Stocks or real estate investments, which one is the best for you guys? For those of you guys that don't know, I started my property journey about 3 years ago, and my stock market journey several months before that. But there was a point where I was torn between the two, guys. Yes, there were the obvious questions like, which one's going to make me money? But then there were the not so obvious questions like, which one am I going to actually be good at? And will that actually make me more money in the long run? Stocks or real estate investment? Which one's better? So I'd like to think I'm in a good position to help you guys decide which one's the best out of the two to take for your individual scenario. But we're going to be doing this in a slightly different way, guys. What you're going to need with you is a notepad and pen, because we're going to be ranking the main comparison points that I've got to talk about later on in this video between stocks or real estate investment. So if you guys need to pause this video to grab all that stuff, then make sure to do that now and resume when you're fully equipped. Welcome to my DS Learning Finance channel, guys. My mission is to pass on as much knowledge as I can possibly pass on to you guys watching this video. If you like what I'm about, then do me a favor, pass on the message to YouTube, guys. And you can do that by leaving a like, sharing this video, and subscribing with the notification bell on too. My first comparison is probably the one thing that investing in stocks has over real estate investment. It's got a lower barrier to entry, guys. Let's be real. This is quite valuable for a lot of people. How easy is it for you guys to get started investing in the very first place? With stocks, it's much easier, plain and simple. You can get investing in the stock market with as little as £1, guys. I still would recommend doing it because it means that your investment has to work harder to justify investing that sort of money. But regardless, all you really just have to do is just open up an investment account and you're ready to go. Whereas with property investing, guys, it can take several weeks, if not months, to even think of doing something with the property. I feel that this is a very valuable point to make between the two, because getting a property can seem like a mountain of a job. What if you have a poor credit rate? How are you going to get a decent mortgage? What if you end up getting the wrong property because your lack of due diligence? Now you're stuck with it. I feel that there is a much better and quicker get in and get out strategy for stocks than there is for property investing. So now on your notepad, I want you to draw up 4 columns, guys, and give them the subheadings of comparisons, rank, stocks, and properties respectively. On the second row in the rank box, I want you to rank that comparison from 4 to 1. The lower the number is, the higher the rank. Is it higher in your priority list or is it low? Similarly, for the stock and the property boxes in the second row too, I want you to give them a ranking number as well, guys, from 10 to 1. Just like the rank box was, the lower the number is, the better it is in the long run. Now onto my second comparison, because I feel like a lot of things are tipping in favor of stocks. I kind of want to reel it back in for you guys, because real estate investment has its perks too. And a massive one is it's got so many ways to generate wealth for you. Notice how I haven't said generating wealth, but I'm talking specifically about ways to generate wealth. Because ironically, I think that investing in stocks can make you just as much money as investing in properties and vice versa. It just depends on what you get a full grasp of. But what we're talking about here is the ways to generate wealth, because investing in properties ultimately has 4 ways to generate wealth for you. The first way is renting out a property. If you do it right, your aim is to get positive cash flow each and every month. This is where your tenants effectively pay for your bills and you're able to keep an extra pot to the side each and every month as profit. The next method is where you add value to a property. This is where you might do up a kitchen, extend the property, or add a conservatory, whatever, to add value to that property to such a stage that it's able to cover that investment cost, doing it up, and also give you an extra pot as profit too. The next game changer here is capital appreciation, which is the natural growth of the property. The more time you allow, the greater in value that property is likely to be in the future. And 4, finally, tax relief. Depending on how you execute your property investments, you can save yourself a lot of tax and financially gain there too. Meanwhile, investing in stocks only has 3 ways to generate wealth from you. The very first one, dividends, effectively a thank you gesture to investors for investing in a particular stock. These only come a handful amount of times per year, guys. The next one is a share price movement. This is kind of similar to capital appreciation. So it's the actual value of the stock. So what you're investing in, that changes as well. You can make some serious money from that. And lastly, you can avoid tax relief too, depending on how you execute your stock investments. But unlike investing in properties, you don't have a 4th way to generate wealth for you guys. And I don't know about you guys, but I like having options. Why? Because you know, if one way doesn't work, you've got one extra option in property to generate wealth for you. And that can be the make or break between making a profit and making a loss in your investment. But now, just like before, I want you guys to rank this comparison, guys. So in the ranking box on the third row, give it a value from 4 to 1, 1 being the highest ranking. What number would you give it? And similarly for the stocks and property boxes on this third row, from 10 to 1, 1 being the highest rating, what number would you give them boxes to? Now my next comparison has to be liquidity, guys. How easy is it for you to get your money out of that property? You see, both methods of investing rely on another party in order to sell their investment to. You see, if you have a crappy stock that's in financial turmoil, then you're going to struggle to sell that stock. Similarly, if you have a crappy property that doesn't make any financial sense to do up, then you're going to also struggle to sell that property too. But in general, what I will say though is that stocks are more liquid than properties. And I think this is because when you invest in properties, to some degree, you are limited, guys. You're limited to what that property represents, you know? Like you're limited to the property's location. Not everyone wants to buy a house in that location that the property's in. You're limited to the size of that property, to the number of rooms available, you know? You're limited to all these things. You're limited to the way, to the process, because a lot of investors might be put off that process. It's quite a tedious process getting a property, guys. You're also limited to the fees. The fees are very costly as well, guys. Whereas with investing in stocks, it's a much simpler and cheaper process. So you have more access there. But just for a curveball, you guys, what does liquidity mean to you? For a lot of investors, property investors, liquidity means nothing because their aims and objectives might more so be directed towards the long term. You know, they might be more concerned with creating generational wealth, not just for their children, but for their children's children and so on. Whereas for other people, liquidity might mean everything, you know. It might be an extra tool that they can put in their back pocket and they know that they can use as a safety factor to fight against the risk of their investment not doing good. The point is, it's time for you guys to evaluate where liquidity is on that table. So you know what you have to do. You have to fill up that next row, guys, just like the previous comparisons before. My last comparison, guys, is the suitability of each method to who you are as a person. Very important. One thing I really love about properties, guys, is that you can physically touch it. You can walk into a property. You can physically touch the walls. You can smell the area. You know, has it got a damp smell? Has it got a good smell? Has it got a bad smell? You can hear the area as well. Are there a lot of busy roads nearby? Is it a very quiet area? Are there loads of animals nearby? And so on. Whereas with stocks, you don't really get this perk, guys. It's more cutthroat. You know, what you're really just concerned about is the share price movement, really, and then you know you can make some decent money from it. Neither method is right or wrong. It just depends on what type of investor are you. And just like the previous comparisons, guys, I want you to rank and rate the stocks and property sections too. But those are things that I look at when I compare stocks or real estate investments. If you guys feel like there are other things to add, then feel free to add them too. Once you have filled out your table, what you then need to do is you need to multiply the stocks and the property sections with their respective rankings, guys, and total them up at the bottom of the table, guys, in the final row. Whichever method, stocks or real estate investments, gets the lowest score, that means that method is likely to be your better suited investment style. What I really love about this is that it gets rid of your bias, guys, and it makes you focus on what's actually really important to you. As you can see, either method can make you just as much money as the other one. It really just depends on what suits you best. Maybe it's both of them, maybe it's just one. Hopefully this video has helped you on your investment journey though. It's your favorite YouTuber, guys. These Learn Finance, financial educate you guys to freedom for beginners by Form Beginner every Sunday at 3 p.m. If you've enjoyed watching this video and what I've had to talk about, then do me a favor, pass on the message to YouTube, guys. And you can do that by leaving a like, sharing this video, and subscribing with the notification bell on too. Bye, guys. Whoa.